you'll pay taxes based on your wealth and your income. And so it's discriminatory. It means you'll pay a different tax in several ways. Whereas the only two taxes we had from the time of the Constitution to the time of the Civil War were excise taxes and import-export tariffs. And those are ad valorem, as your Latin. Right? They were ad valorem, which means it spread out evenly across the population. Everybody pays when you buy different goods. So in the Constitution, they put three provisions in. The first one, taxes have to be apportioned among the states. Later on in the Constitution, they made the statement, taxes have to be uniform across all the United States. And finally, in the last provision, they said any capitation or direct tax has to be in proportion to the census, which means it has to be even throughout the population. Okay, so remember three things: apportioned, uniform, and proportional. The Constitution was put together to make sure those three hurdles would never be jumped over, and that we would guarantee we'd never find ourselves in a place with a direct income tax. Okay? So think about that. The founders wanted that, and up until 1861, the beginning of the Civil War, everybody maintained that. Okay? So now we get into some more common sense. Here's what Hamilton had to say. He says, if Congress can employ money indefinitely to the general welfare, powers of Congress would subvert the foundation, in fact, the very nature of the limited government established by the people of America. Would you agree with that statement? Imagine if he was envisioning, can you imagine if Congress could just do that? I mean, that would take away the whole thing we fought for. Let's see what James Madison had to say. He said, a national revenue system must be such a one that while it secures the object of the revenue, it shall not be oppressive to our constituents. You typically see that on the doorway over the top of the IRS offices, right? When you walk in, okay, it shall not be oppressive. Thomas Jefferson had this to say: if you're going to take from one because it's thought that he has acquired too much in order to spare to others who have not exercised equal industry or skill, that's to violate arbitrarily the very first principle of association. Would you agree with that? Imagine moving, today we call that what? Wealth redistribution, right? The idea that, well, you're doing really well, maybe you're not doing so well, so we're going to tax you, and we're going to move income over here to make it all egalitarian and so forth, okay? Ben Franklin traveled all throughout Europe, took a look at how the different countries there took care of their poor. And when he came back, he said, you know, I'm all for doing good, but what I've seen is that the less they provided for themselves is when you gave too much to the poor. And on the contrary, when you do less for them, he says, you kind of give them an incentive for them to do more on their own and become richer. And he was saying, look, I'm all for helping people in need, but I'm also really concerned that if people become dependent on the government, they'll never have any incentive to do anything on their own. How many of you are familiar with the contract with America back in 1994? Okay, Jack Kemp and Newt Gingrich were in the House at that time, and they sat down and worked out this deal with the president. And one of the big provisions in that was welfare to work. And they dropped the welfare rolls almost 60% in the ensuing years by giving people a pathway to get a job and get off of welfare. Okay? That's a lot of what Franklin was getting at. Then Hamilton comes back one more time. He says, you know, if duties are too high, or if taxes are too high, they lessen the consumption, the desired collection is eluded, and the product to the treasury is not so great as when they are confined within proper and moderate bounds. Would you agree with that? If taxes are too high, it actually defeats the purpose of collecting taxes because people realize there's no incentive to do anything, right? And that sounds like what? Anybody read anything by Art Laffer? You know, have you heard of the Laffer curve? Okay, Laffer curve is pretty easy. If you tax at 0%, you don't bring in any revenue. If you tax at 100%, you bring in no revenue because nobody will do anything if you have to give everything to the government. Somewhere between there, though, there's an optimum tax rate at which you can do a great job for growing the economy and at the same time have tax revenue coming in for the government. Now, I know this is way beyond your age group, but there was a great comedian back in the 60s and 70s by the name of Henny Youngman. And Henny had this great statement where he says, you ever notice when you put the and IRS together, it spells theirs? Is that just accidental? I don't know. All right, so the period of common sense, 1789 Constitution up to the time of the Civil War, everything we did as a government was covered by excise taxes, which are ad valorem, proportional, uniform, apportioned across the population, and by import-export tariffs, which are also based on goods coming into the country. Andrew Jackson was president 1834, 1835. Do you know there was so much revenue coming in from just these two equally proportioned taxes across all goods, and the economy was growing, and the revenue coming in was larger and larger to the federal government, do you know he actually made a statement that we're collecting too much tax revenue? Wouldn't you love to hear that today? A politician get up and say, you know, we're actually collecting too much revenue. And you know what he did? He, with executive pen, said we are going to get rid of all excise taxes, and we're going to cut tariffs by 50%, and we'll still have enough revenue for the government and the military and so forth. Okay. Can you imagine a politician doing that today? Okay. We can dream, right? So, now we get to the slippery slope. It's 1861, the Civil War is getting started, there's secession from the southern states, and Lincoln is agonizing with his cabinet over, can we raise money by doing a direct income tax that is discriminatory based on each individual person's wealth and income? And they're debating it and debating it. There's a great book. Have you heard of Doris Kearns Goodwin? Her book is called A Team of Rivals. Anybody have a chance to read that? You should make a note to yourself. It's a great book, really good book to read if you want to read about Lincoln and his cabinet. And they're agonizing over, can they do this income tax? And is it constitutional? How would we collect it? What about federal employees? Should we make it temporary, etc.? So here's what happens. They first put in place, now follow me on this, you're going to love this. They first put in place the Revenue Act of 1861, and for a whole year they collect nothing, because they haven't figured out a way to collect the tax. Okay, so it's on the books, hey, we have an income tax. How much have you collected? Nothing, because we don't know how to do that. Okay? Now you get to the Internal Revenue Act. 1 year later, they update it, the 1862 Act, and you know what they do? They raise the rates on the taxes, but nobody's even paid the first year rates yet. Doesn't that sound like a great government move? You have a tax program in place, no one pays anything on it, and then when you finally figure out how to collect it, you raise the rates the first time people are going to pay it. So nobody ever paid the first year rates. Great trivia. Okay? By the time you get to 1864, the war is going on quite a lot. You know, it's a lot longer than I thought it was going to be. And I want you to get this number in your head. The taxes in 1864 compared to taxes in 1862 on the same individual would go up 265%. So in today's economy, put yourself in the position you have your first job out of college or whatever, and let's say you're paying $10,000 in taxes on your income, you would be paying $26,500 the next 2 years later on the same income. Would you be upset with that? Would you just go with it? Right? People were outraged. So here we are only 3 years into income tax, and it's already been now raised 265% on average. So the Civil War ends in 1865. What happens to the temporary income tax? You can tell by the tone in my voice, right? The temporary income tax. What happens to it? Well, they keep collecting it. In fact, in 1866, the war's over, they have record revenues of $310 million collected that year. And the politicians are kind of going, it's pretty cool. People are kind of in the groove of paying their taxes. Okay? So what happens in 1867? Well, they're still paying their taxes. And look what the New York Times said in their editorial. No businessman could pass the day without suffering from those burdens, referring to the income tax. Then you get to 1868, and what are they doing? Take a guess. They're still collecting the income tax. 1869, still collecting. In fact, now the New York Tribune has this to say. The income tax is unnecessary, unfair, the most odious, vexatious, inquisitorial. Don't you love those adjectives? When was the last time you used vexatious in a sentence? Have you used that recently? Okay. Inquisitorial, unequal of all taxes in its collections, apparatus, and methods. How do you think they felt about the income tax? Okay. 1869, the thing has been going for 4 additional years after the war's been over. Now it's the 5th year. By 1871, okay, it's 7 years after the war has ended, and the New York Times has this to say, look, the income tax has been unpopular from the moment of its enactment. It's been just as various other obnoxious taxes were tolerated because it was one of the inevitable burdens entailed upon us by a great war. We have reached the time when the income tax can be no further defended. It is not worth the cost. That's a great quote for today, I would say. I think some of you are a little bit chilled out and about this because you haven't paid income taxes yet. You talk to people who are over 25 or 30 years old who are actually watching their paychecks disappear to taxes. I think there's a little bit more of a pain to this. Maybe, how many of you have parents who have entrepreneurs, they have their own company, run their own business and so forth, okay? Talk to mom and dad about their tax issues sometime, okay? And it'll be a really fun conversation. Give them a copy of the book and let them read that. So, Civil War ends in 1865. In 1872, the 1864 law was only good for 8 years, 2 White House terms, and then it was going to expire. The only good news I can tell you is that when it was ready to expire, instead of extending it, they actually went on the record and said, we're not going to extend it. So Congress gets a little bit of applause, I guess, or something, but they didn't extend the income tax in 1872. So from that next year, 1872 on to 1892, you have 20 years of a major expansion in the economy. Can you imagine that? No income taxes and a major expansion of the economy. Yeah, I think that works, right? Okay. So by the time you get to 1892, this gentleman, you know who he is? Mark Twain, okay, Samuel Langhorne Clemens, right? Do you know he was a taxpayer all during the 70s, 1870s, and right up to the point, 1860s and so forth, during the Civil War and all. And he makes this great observation. What's the difference between a taxidermist and the taxman? Anybody have any idea? Well, at least the taxidermist leaves the skin. Okay, so that's a nice reflection. Now it's 1878. And they're starting to have debates and discussions about reviving the income tax. And Harper's Weekly in New York runs this very famous political cartoon. Can you see her? It's Lady Liberty, and around her neck is a millstone called the income tax. And she's shackled in the back with additional taxes. You can see the burden as she leans over. What does it say at her feet? She's now become a slave to her liberty. Okay? I wonder how they really felt at Harper's about the income tax, right? Okay? And so you get to 1892, 20 years of no income tax. They finally beat it down several times. And now Grover Cleveland becomes the president. Look at 3 quotes I pulled from speeches and from newspaper articles that he was quoted in. Those quotes sound like stuff from today, don't they? I mean, you read this stuff and you think to yourself, oh, it's a heavy burden on low-income workers. There's income inequalities, unfairness, it's dividing the economic classes. So what they did, as soon as he got in office, they introduced a thing called the Wilson-Gorman Tariff Act. Now, hold on to that word, Tariff Act. What's buried at the bottom, at the last several pages of the Tariff Act? Take a wild guess. An income tax. An income tax. Leave it to government officials, politicians to do what? Well, we're going to try an income tax again, but we'll call it the Wilson-Gorman Tariff Act. But we'll hide an income tax in there. Well, the tax comes out, people realize there's an income tax on businesses and individuals. It immediately goes to the courts, there's all kinds of lawsuits. And this particular case of Pollock versus Farmers Loan and Trust goes all the way to the Supreme Court, and the Supreme Court stands by the Constitution. What are the 3 things? Apportioned, uniform, and proportional. Remember those terms? It violates all those. And they struck it down as unconstitutional, and the income tax was gone. We have an expanding economy following that period. In 1896, you know who this man is? McKinley. William McKinley. Okay, he becomes president, and very conservative, very anti-income tax and so forth. Presides over a very strong, expanding, growing economy. He wins re-election in 1900, but in 1901, he's assassinated. And his vice president, Teddy Roosevelt, comes in and finishes out his term. Roosevelt wins again in 1904. And then in 1908, he's trying to figure out, do I run again? Because I really didn't have a full term the first time and so forth. But his really good friend, William Howard Taft, a very strong conservative, is going to run in 1908, and he wins. And so during this 16-year period, from the end of the Grover Cleveland administration up until 1912, take a guess what happens in those 16 years with no income tax. How's the economy do? It does amazing. It's booming at about 4.5% growth annually in GDP. And you have this new emerging thing called the middle class. There's already been flight at Kitty Hawk, right? You've got all new things like a telephone and telegraph. You've got locomotives and so forth. You have people who are driving automobiles. There's electricity in homes. There's phonographs. John Pemberton has created this new drink called Coca-Cola, and he's distributing it, nationwide. George Eastman has come up with, ever heard of Eastman Kodak? Right? Come up with a new patented thing for rolled film. I mean, all these great new inventions. Thomas Edison has all kinds of things funded by John P. Morgan and so forth for the capital needed. And so it's a great booming time. And so what do you do when you have a great booming time? Well, you have progressive liberals come in right behind there and start to say these things, okay? So these are the 3 quotes I pulled from Woodrow Wilson during his campaign and heading into the election. And again, don't these sound like something you would read about today? The wealthy aren't paying their fair share. There's a growing divide between the wealthy and the average citizen. It's a disproportionate gain to the wealthy and the middle class. Amazing. And you know what? He wins. He wins. Now, why does he win? Well, here's what happens, okay? William Howard Taft is the incumbent president going for a second term, but now Roosevelt feels like, you know what, I should get back in the race. He starts a new party called the Progressive or Bull Moose Party, and he splits the conservative vote and ends up giving the election over to Woodrow Wilson. Do you remember how this happened in 1992? Yeah, Ross Perot, same thing, okay? George H.W. Bush was going up against the Arkansas governor, Bill Clinton, and Clinton became president with less than 50% of the popular vote because Perot had about 20% of the vote. And again, that's the problem with the third party and splitting things and so forth. You literally just give it to the other side. So he comes into power, and you know what? They are so determined to get this income tax in place that how do you get it in place if it's been struck down by the Supreme Court several times in the last 50 years because of those three things: apportioned, uniform, and proportional? How about just change the Constitution and get rid of those things, mitigate those concerns? How do you think the Founding Fathers would have responded to that? They put so much time and energy into making sure that proportional, uniform, and apportioned was in the Constitution to ensure we never got to a discriminatory direct income tax, that they decided to do what? Let's change the Constitution. So the 16th Amendment was put in place, and we got rid of those things. And then, within a couple years, this is the new lineup for the average American taxpayer. Do you know that the federal income tax went in place, and within 5 years, 13 states had also come up with a state income tax? People couldn't believe it. They were saying, wait a minute, we just got this new federal income tax I'm paying to the US Treasury. Now my state wants me to pay a tax to them on the same income. And then you had things like federal excise taxes, federal tariffs. Then you had a new thing called an inheritance tax. Okay? In the inheritance tax, what they said is, hey, you spend your whole life building up wealth, stocks and bonds and different kinds of things, the business that you may own, the family farm or a home and so forth. You pay all your taxes over all these years, and now, heading into your later years, you set up a will and you'd like to distribute it to people at your death. Sound normal? Right? Sounds like in a free market you should be able to do whatever you want with that. They're your assets. But there was a concern at the liberal politicians that what if people keep leaving these assets to their descendants? Won't that start to create an overconcentration of wealth among a few elite families? Terrible, terrible rationale. Horrible argument. The first inheritance tax, hold on to your tables right now, 65%. Can you imagine having an estate and you want to leave it to your heirs, your sons, your daughters, a charitable organization, maybe your business partner, whatever, and the IRS could come in at the top level and actually take 2/3 of the value? In fact, it's so bad. What if most of your assets were things like buildings and a business and a farm? You have to pay the taxes with what? Cash. What if everything was paid for? There's no mortgage on anything. How would you pay the taxes? You'd have to take out a loan on something that's already paid for so you can pay the tax to the federal government. And if you didn't do that, the IRS would come in and just seize the land or seize the business or take the house in order to pay the taxes. I'm sure that's exactly what the Founding Fathers had in mind for our free society that we fought for. Wouldn't you say so? Some of you are going, wait, was that facetious? Should we be nodding with that or not? Okay, so you know what they started doing? Smart people said, hey, before they hit us on the inheritance tax, before I die, I'll start gifting out sections of my assets to people and have it all out before it ends up getting hit with the inheritance tax. So what do the politicians come up with? A gift tax. You can't avoid the inheritance tax. You try to gift your income away, we're going to hit you with another tax. So now you have the gift tax while you're alive, and then the inheritance tax after you're dead. And then they came up with property taxes. Now, I got to tell you, to read through the original documents of the founders, this was the one that they felt was the absolute worst, greatest abomination you could ever do, was to go to a landowner and say every year on your farm or your business or your house, you have to tell us the value of it and give us a percentage of that in cash as a property tax. It's the most discriminatory tax that you could possibly have on an income tax, direct tax basis. And they actually went ahead and put in place the property tax. The only concession they made was that they aren't going to tax the land, just the building. So talk to your parents sometime about the house they own or whatever. You pay property taxes on the structure, but you don't pay tax on the land. Okay? So, what does Jay Leno say? Well, Jay says this, hey, you got to avoid, if you want to try to avoid having an audit with the IRS, make sure you don't have any red flag, okay? Like for instance, if you still have money in your bank account after you're done paying all your taxes, that's a red flag. Okay, so just remember that. Who's this gentleman? FDR, okay, it's now the time of the Depression. We have our nice lineup of taxes we talked about. So now, in the 1930s, he introduces the Social Security tax. It's going to come out of your payroll. You pay 1%, and your employer pays 1%. And you have 159 people paying in for one person getting benefit out. So on paper, how does that sound, generally speaking? It's horrible as far as I'm concerned. But hey, it's 1% and 1%, so that's 2. And 159 people paying in, one person getting benefit out, sounds okay. The only problem is it goes from 159 to 1. By the time you get into the post-World War II era, it's down to 40 to 1. You get into the 60s, it's 16 to 1. 70s, it's 8 to 1. The time of Reagan, it's about 3.5 to 1. Early 2000s, it drops to 2.8 to 1. Today, it's about 2.6 to 1. Social Security goes bankrupt at anything under 2.7 to 1. So you have 2.7 people paying in for every one person getting benefit out. And we're on that trajectory right now. In fact, right now, all the income collected on the Social Security payroll tax each year coming in, when it turns around and goes out, there's not enough coming in to pay all the benefits going out. So it runs a deficit every year. And it's been doing so for 13 consecutive years. And it's widening the deficit every year. Okay? This is going to be your problem unless people my age fix it. Okay? So if people in the late 50s, early 60s don't fix this thing, it's just going to be passed down to you, and it's going to just implode. Now here's the interesting thing about Social Security. Social Security, when I was in college in the late 70s, people talked about, oh, it may not be around in 2040 or 2030. And that's 70, 80 years later, we thought, oh, whatever. Now we're talking about the fact that Social Security can probably implode upon itself in as little as 14 years from today, okay, prior to 2030. Some estimates put it at maybe 2026, 2027. That means it has to have something done to it today proactively. Otherwise, it's just going to get to a place where it'll just fall apart and it won't have any checks to send out. Okay? So, isn't this exciting, by the way? Aren't you feeling upbeat and really excited about our nation? And okay. So, right in the middle of the Second World War, if we don't have enough bad news already, they start taking a look at people who say, now, Jolie, you bought some stock, and then you sold it at a profit. And she's like, yeah. And they go, can we tax that as an income tax? And they had a big debate on the House floor, and they realized it's not income, because it's a one-time, non-recurring transaction. She sold an asset at a profit. So it's not income tax. So they came up with, well, she actually made a gain on a capital asset. Gain, capital gain. That works. Capital gains tax. So every time you sell a building, stocks, bonds, anything at all that's an asset, and you make a profit on it, you got to pay a tax on it, in addition to your income tax. Got it? And then they introduced dividend double taxation. You're going to love this. Okay, corporations, right? They run their business and so forth. They pay all their corporate income taxes, and then at the end of the year, they have a net profit. And from that, they can either reinvest back into retained earnings in the company, or they can pay a dividend out to the shareholders. You get a check in the mail. Hey, I'm a shareholder of the company. They sent me a dividend. The money they sent you has already come from taxes paid on it, right? This is after-tax money. But when you get your dividend check, Jolie, the IRS says, you got to pay tax on that as income. And you're like, well, wait a minute, the company already paid taxes on this. This is just them distributing the after-tax profit. Yeah, to them it's after-tax. To you, it's income, and you got to pay tax on it. So all dividends to today are still double taxed. Ask your parents about that one sometime. Another really wonderful conversation starter when you're home and so forth. Fun topic to get into. Who's this gentleman? LBJ. Okay, now we're into the 60s. And doesn't Lyndon Johnson look excited in this photo? Okay. So now we have the Social Security payroll tax, capital gains, dividend double taxation, federal income tax, state income tax, sales income tax, federal excise tax, federal tariffs, inheritance taxes, gift taxes, property taxes. We're not even done yet. So he introduces the Medicare payroll tax. Okay? So now there's an additional tax going to be taken out of your paycheck on top of the Social Security. Now remember, what did Social Security start with? 1% you pay, and your employer pays 1% for a total of 2%. Today, Medicare and Social Security combined are now, you pay 7.65%, and your employer pays 7.65%, for a total of 15.3% of your income is payroll tax. I have 4 kids. They're between 25 and 31, and when they all got out of college, got their first job, everybody called me when they got their first paycheck. Dad, what happened? I figured it out. I think I'm taking home 79.2% of my gross. What happened? And I said, well, remember I told you about, I went through all that, and they were like, I didn't realize. In fact, out here in California, we have another 0.9% is taken out for California SDI, State Disability Insurance. Okay? And they call it 0.9% because that's not really a percent. Well, it is. It's a percent. Okay, so now you have all these taxes to look forward to. This is another favorite comedian of mine back from the 80s. I don't know if you've ever heard of David Brenner. Okay, but he made the comment. He says, my last paycheck at work was for $0. So I took it into the accounting office. I said, what's up with this? And they said, all these new payroll withholding laws and everything about taxes, they changed it. It's so complicated. Easiest thing was to just withhold everything. So that's why he got a check for $7. Okay, so he's got a better smile, right? A couple of things just to keep you excited about. In the book, we have a chapter in there on a couple of things. Have you heard of Tax Freedom Day? It's how many days in the year the average person in America has to work in order to make enough money to pay all their sales taxes, income taxes, property taxes, et cetera, et cetera, et cetera. Take a guess how long it takes to get into the year before you've worked enough on average to pay your taxes, all your taxes. Right now it's 115 days. 115 days. The Tax Policy Institute has basically, if you read it on the web and so forth, our current tax code is the equivalent of 70,000 8.5 by 11 pages. 70,000. In fact, you know the blue 1040 form? Maybe your parents do the IRS 1040 when they do their taxes. It's a 2-page form. The only thing is the booklet with the instructions to fill out the 2-page form is 114 pages. That's the instruction booklet. And the National Association of Tax Professionals boasts, they actually boast about this. They're not being facetious or sarcastic. They actually boast about this. There are over 800 undergraduate and graduate programs in the United States where you can get a master's degree, a PhD, or a law degree in taxation. Imagine studying and getting a professional degree in taxation. I have a master's degree in taxation. I have a doctorate degree in taxation. I have a legal degree in taxation. You go to the websites for these places, they actually boast on the websites. DePaul University, Boston University, USC, places like that. It's amazing. They boast and say, our program of 17 classes will help you navigate the complexity of the IRS tax system and so forth for your clients. So, here's all the taxes that you have to pay. Makes you want to stay in high school as long as you possibly can, right? Okay. And here's a couple of new things coming out now. I haven't had a chance to get into time to get into all, but do you see the alternative minimum tax there, the AMT? Ask your parents sometimes if they've ever had to do the AMT. Here's how the way that works. You do all your taxes, take all the legal deductions you can, all the write-offs and everything like that, and you figure out your tax. And then at the end, it has a little question that says, is that income over a certain level? If you answer yes, they say, well, you can't file this form then. You gotta throw it away, and you gotta go over and do the alternative minimum tax, which means you can't take all those deductions, and you can't take all those write-offs, and you can't deduct your charitable contributions, and you can't deduct your interest on your home. And then you get a much higher tax rate at the end, because that's fair, okay? Anybody who has, uses those legal things and lowers their taxes, but if it's above a certain level, arbitrarily, the politicians have decided, then you go over to the alternative minimum tax. Wouldn't that be exciting to do? And the Obamacare penalty tax, well, that's a right one. They're now in their second year of trying to figure out, do I pay the tax? Do I get the subsidy? Do I buy the insurance? If I didn't buy the insurance, do I have to pay the tax? How do I file that? I mean, it's a mess right now. They have really no idea. I mean, it's going to take a couple years for them to even figure this out. Here's a couple of new taxes that have been proposed. The internet use tax. You don't have to pay a tax every time you log on. That would do wonders for the private sector economy, wouldn't it? Okay. We have a thing now proposed for this fall called the California Millionaire's Tax. If you make more than $1 million taxable income, you're going to have an extra 0.5% on your income over $1 million for additional social programs, because again, you're making too much. Obama has proposed a $10 per barrel oil tax because we have such a glut right now. And have you heard of cap and trade, carbon tax? So that says the United States is allowed to have an overarching total amount of carbon that we're allowed to do. And then each industry gets parsed its proportional share of that total. And then in each industry, all the companies get their share of the industry total. Now, when you get your little carbon set to you of how much you're allowed to have, if you're over that, you've got to go buy carbon credits from somebody who's under. Some of you are sitting there going, wait, you're joking, right? Think about that. If your company's over what's allotted to you, you've got to go find somebody who's under and buy their credits to cancel out the fact that you're over. And if you're under, you're excited because you get to go out to the marketplace and sell your carbon credits. Do you know there are actually people right now in this proposal, it hasn't happened yet, but if it were to go into place, they would be full-time traders on Wall Street of carbon credits. Imagine saying, yeah, I went to school, went to business school, got my econ degree, got my MBA in finance. What do you do for a living? I trade carbon credits. Good commissions on those, yeah, you have a whole portfolio of carbon credits, you know. Isn't that nuts? Okay. Oh, and I even put in there that you'll have to look at on the in the book. It gives you a whole rundown on this, but the Tax Foundation estimates that we waste 6.6 billion hours a year doing tax preparation, tax strategies, everything related to preparing and doing our taxes. So let's close with a couple really good quotes, and then we'll do some Q&A. Have you ever read anything by Alexis de Tocqueville? Okay, he's a Frenchman, came over here in the mid-19th century, wanted to check out the American experiment with democracy. I love this first quote. It says, let me get this straight. So in other words, a democratic government is the only one in which those who vote for the tax can escape the obligation to pay it. Okay. And then my favorite one he says is this: I do not know if people in the U.S. would vote for superior men if they ran for office, but there can be no doubt that such men do not run. Okay, that's a great observation. Milton Friedman, have you heard anything by Milton? Okay, Chicago School. A society that puts freedom first will have as a happy byproduct, they're going to end up with greater freedom and equality. See, he says if you pursue freedom as the primary thing you want to do, not only do you get the freedom, but you actually see more equality going on as everybody benefits from that. But if you flip it and you spend your time focusing on equality first, his observation is you get neither. Because you lose the freedoms as well as not attaining the equality. Friedrich Hayek, have you had a chance to read some Hayek? Okay. Boy, only about 6 or 7 of you. Okay, so yeah, some of you have a big summer reading list to do. After you finish job creation, after you finish the Misguided History of American Taxes, we're going to send out an email to the rest of you with kind of your summer reading list to make sure you get up to date here. Okay, so the Road to Serfdom, have you had a chance to hear about that or read it? Okay. Hayek says there can be no doubt that most of those in democracies that demand a central direction of all economic activity, those people still believe that socialism and individual freedom can still be combined. And we know from practical reality that North Korea, that's been a great success story. Cuba, wonderful success story of communism with individual freedom. The former East Bloc, right? Okay, we recognize it doesn't work. In fact, John Kennedy, he was prepared prior to his assassination to do a massive tax cut in 1964, heading into what would be his second run for the presidency, his second term. This excerpt came from an address he gave to the New York Economic Club, where he said, it's paradoxical truth that tax rates are too high today and tax revenues are too low. Well, duh, right? Everybody understands that if your tax rates are too high, you don't bring in the revenue you expect. So he said this: the soundest way to raise the revenues in the long run is to cut the tax rates. So that way you can grow the economy, and a larger economy taxed at a smaller rate actually brings in more dollars of revenue. So here's the problem right now. It's all about complexity versus simplicity. Who wants it to stay complex? These folks. Because when it stays complex, you need them and their products, and you have to pay for that stuff. Would you agree? Okay. Who wants it to be simple? Not all of you. Okay, so some of you are going to study tax accounting when you get into high school and college and stuff. Okay. Steve Forbes showed that you could do a flat tax on a form for individuals to be about the size of a postcard. Here's your income, here's one exemption for some modest allowance for a family or something, and the balance, and you pay a flat tax on that, you send it in. Businesses would say, here's our sales minus cost of goods sold, here's our gross profit, here's our tax at 15%, we send that in. Would we still need accountants and attorneys and so on? Certainly. You still have to do your books, you still have to do your profit and loss statement, your balance sheet, you still have to do payroll and so forth, but you wouldn't have to waste all those thousands, millions of hours doing tax strategies and trying to manipulate your income and do write-offs and carry forward provisions and carry back provisions and so forth. Will Rogers, Will, I love his quote. The difference between death and taxes is death doesn't get worse every time Congress meets. That's a great one, okay? Here's what I propose in the book. We'll take a look at chapter 25, what I call common sense solutions. Flat tax or fair tax, one of the two. Eliminate the IRS and payroll taxes. Imagine having your paycheck not have any deductions taken out of it for the taxes. That'd be great. Got it. Simplifying all the compliance, saving all the waste, and all you need is something that's revenue neutral. Right now, our payroll tax and our income tax for corporate and individuals brings in about $3 trillion a year. We show in the book that there's an easy way to do the same $3 trillion without any of all the 700 forms and all the different deductions and things like that. Just a simple, flat, or fair tax. Reagan said this, all of us want greater fairness and incentives and simplicity in taxation. In fact, this quote is on the inside of the dust jacket on your book. So take a look at that if you want to. But the whole speech is there. I just gave an excerpt here on the slide. But he says, remember, there's no limit to growth and human progress when people are free to follow their dreams. Would you agree with that? That American dream belongs to you. It lives in millions of hearts. That means that you have the opportunity to go out without the burden of taxes being so heavy and the compliance. William Simon, last slide. He was the Secretary of the Treasury back in the time I was in high school and starting college. He was a pioneer in trying to fix the tax code and simplify it. And he got run out of Washington, D.C. by all the special interests and all the lobbyist groups and so he was the Treasury Secretary. He actually put out a paper with a whole 10-point plan on how to simplify the tax code. And this was what he started off his paper with. The nation should have a tax system that looks like someone designed it on purpose. Because what we have right now is just this crazy thing. It's this patchwork quilt that just makes no sense. So what we're going to do at this time is going to open up and ask some questions. So this is your opportunity to ask me anything about taxes and so forth. Let's start with right here. What's your name?
Oh, I'm Jorge Villarreal. I'm from...
Oh, we're going to wait for the microphone? Here it comes.